Hey guys, Michelle Massio here. Thanks for checking in. Thanks for checking out my video. I'm gonna do a quick video today. I'm gonna talk about volatility. Super important. Here's why it's important. Number one, I have a group of traders. They're not professional traders or anything. They're part-time traders, right? So they have a regular full-time gig and they trade options on the side. And the reason why they do that is because they want to make extra income. And so a lot of them were kind of freaking out this morning because the market opened up super down. And some things were down like 20% and some things are still down. And so here's the thing. You don't want to freak out when things are down 20%. You want to embrace that. Number one, you have to know logically that the market goes like this, right? So it goes up, it goes down. That's the natural course of the market. And number two, I heard this a long time ago and it's super true. Everybody makes money when the market goes up, but people make fortunes when the market goes down, if you can capitalize on those opportunities. So don't freak out when the market goes down. Consider that an opportunity to either pick up more shares at a lower cost, so you're averaging down your cost. My hair looks jacked today. I was just I was just working out. I'm gonna fix that as I'm talking to you. Every morning I work out with my fitness guy from 7:30 to 8:30, and I haven't taken a shower yet. It's only 9. I haven't even made breakfast yet. 9 a.m. Pacific time. I'm in Los Angeles. Anyway, don't look at my hair. It's all good. The content I bring you is solid. So let me finish talking about volatility. So they were kind of freaking out. You want to embrace volatility. So people make money when the market goes up. People make fortunes when the market goes down. You want to capitalize on those opportunities. You can do that one of two different ways. Actually, you can do it a couple different ways. There's a million ways to skin a cat, right? One way, you could pick up more shares at a lower cost. So you're averaging down your cost. Number two, this is actually really cool. You can sell puts, especially as the underlying, as the stock tumbles, you can sell a put and get paid a lot of money, especially relative to the risk that you're taking. I'm going to share my screen. I'm going to show you a couple things, right? And I'm going to show you another a trade idea also that you guys should consider. Okay, here is the. Let me pull it up here. I'm going to look at, wait, what's the name of it? Let's see. I'm going to look at UVXY. Okay. So this is a volatility index. So this is pro shares. It's a exchange traded funds, it's an ETF, and it tracks the volatility index. And the idea behind it is it intends to hit 1.5 times the short-term volatility index. And here's the thing about volatility. And here's the thing about hedging and building a portfolio and things like that. It is really a good idea generally to build a portfolio with things that are non-correlated inside of your account, right? What do I mean by that? What I mean by that is, and a lot of times people misunderstand correlation and how things are related to one another. And diversification. You can have 100 stocks in your portfolio and you can think you're diversified, but you kind of aren't. Because why? When the tide rises, all boats rise. Generally speaking, one stock goes up, they kind of all go up. Now, obviously, that's not always the case. So you might have one stock going up, one stock going down, and maybe they go up or down in different proportions. And I get that. But for the most part, you don't have true diversification. You don't have true hedging in your portfolio unless you have non-correlated assets. So what do I mean by non-correlated assets? You want to add a little bit of volatility. You want to add a little bit of commodity. You want to add maybe some cryptocurrency, some blockchain type things. That gives you a hedge in your portfolio. Now I'm going to have some other videos that talk about blockchain because there's some really good opportunities right now with cryptocurrency. And you can capitalize on cryptocurrency without having to buy Bitcoin on Coinbase, which is kind of annoying. And then you're going to, there's a lot of negative attributes to that. I'm not bashing it. I trade Bitcoin as well. Anyway, that's for another video. Let me talk about volatility here. UVXY, or also VIXY, VIXY, that's another volatility index. I think it's VIXY, yeah. But right now I'm talking about UVXY. So it's 1.5 times volatility. So look at how it's come down. This is the past 1 year, right? So this is a 1 year chart. Look at it, went up. When did it go up? It went up when the market kind of tumbled back in March, right? So COVID had started, the market went down like a rock, volatility shot up. So typically stocks will go down, volatility goes up, right? So that is typically the correlation. What do we see when we look at this? And people, you don't have to be like a stock genius, a math wizard, or anything like that to be successful trading options. I guarantee you, I could teach anyone how to trade options. Just look at it logically. Look at it with your eyes, right? So see, it's come down, right? So right now it's last traded $9.51. So it's very, very low. I just bought 1,000 shares. Let me show you. Let me just refresh my screen here. So for example, I just bought 1,000 shares and then I sold 10 contracts, call contracts against it. Let me show you how I did that. This is a very good trade idea for you if you're not already, especially if you're not already using volatility investments, right? Okay, so UVXY, I bought 1,000 shares. The price I paid was 9.455. That's my average price right now. Last trade at 9.49. Then I sold 10 contracts. February 26th, so that's this Friday. I had a conversation with a friend of mine yesterday. He asked me, how do you trade contracts? Do you usually do 1 week, 2 weeks, 1 month? Typically, I'm doing 1 week. And actually, this is only, today is Tuesday, right? Today is the 23rd of February. This is this Friday, so it's only a handful of days, 3 days out, right? I want instant gratification. Why do I do short-term contracts? I don't know what the market's going to do. I don't have a crystal ball. I don't have a magic wand. I have no idea if it's going to go up or down or sideways or whatever. I want to do short-term contracts and I want to lock in my gains as I go. If you do that, you have a higher success rate. I'm telling you, it's just the law of the universe. That's the way it works. Okay, so here's what I did. I sold 10 $10.50 calls. Now, why did I choose $10.50 as my strike price? That's the price at which I will sell that stock or ETF in this case, if it reaches that price or above. Why did I use that price? Now, sometimes what I do is I go to the next strike above. So if I paid 9.45, I would do like a 9.50 call. And the idea behind that is I want the call to be assigned because I just want to collect that income. I just want to take the income in. It's a very good income strategy. It's consistent, ongoing income for yourself. But sometimes what I do is I like to keep certain things in my portfolio all the time. I like to keep a little bit of commodities in my portfolio all the time. And I also like to keep a little bit of Bitcoin in my portfolio all the time, or blockchain type, cryptocurrency type assets. And I like to keep some volatility type assets in my portfolio because those are hedges in my portfolio. This is super easy to make money in the stock market. It's harder not to lose your money. So I had one person in my group today said he was down 20%. It can be easy when you're using leverage and you don't have stops in to protect yourself as the price goes down. It can be easy to be down a significant amount of money. So you want to protect your account. And one of those ways to do that is to have certain hedges in your account, like volatility, like we're talking about. So what I do is I look at delta. Now, delta is not confusing. A lot of times people will kind of be shy away from options because they hear these like words that are scary to them or intimidating or something like that. Delta, it has a technical definition. Forget about that. I'm going to give you the layman's cheat sheet version, the Cliff Notes kind of idea behind delta. Delta is the statistical likelihood or the mathematical likelihood that the price is going to go from where it is to some other price between now and the expiration date. So what do I mean by that? So if we look at the delta, and it's not an exact science, but it's a pretty good estimate. UVXY has a 32, you see the delta says 32, a 32% likelihood that it's going to go from where it is now, 9.49 per share, to 10.50 between now and this Friday. Is only 3.5 days away, right? So not very likely. My intention is I just want to take an income and I just want to keep doing that week to week. How much did I get paid for that? I got paid $32 per contract. So 0.32, it's always times 100 because there's 100 shares in a contract. So 0.32 times 100 is $32. I sold 10 of them. Why did I sell 10? Because I bought 1,000 shares, right? So I sold 10 contracts. So I took in $320. So here's what I did. I hedged my portfolio. If I'm wrong, it's okay. Like, who cares if I'm right or wrong? This is all about not being able to predict the stock market, because if I could predict the stock market, I wouldn't be on this fucking YouTube channel talking to you guys. I'd be like not talking to anybody like you, period. And that's just the fact of it. And you want to keep that in mind. Nobody's going to be able to predict the stock market. If we can't predict the stock market, we just want to take in income. We want to make money no matter what happens. And that's what this strategy does. Okay. So let me just wrap that through again, just to make sure that you guys are clear on this. UVXY, I bought 1,000 shares. I paid 9.455. Now it could go down more. And guess what? If it goes down more, I'm going to buy more shares. Why? It's not going to go to zero. It's a volatility index. I mean, theoretically, there's always a likelihood or a possibility that it can, but it's very unlikely. If it goes down, I'm going to buy more. If it went down to $5, you bet your ass, you better expect a crash coming, because basically that's what that means. Like if we look at the volatility, let's look at a chart over the last year. Okay. Now see how this came down. So when something comes down, it's, the more it comes down, that's because the market is going up, right? You follow me? So when the market goes down, and it will, the market is always cyclical. It's not a matter of if the market goes down, it's not going to go to the freaking sky, people. It goes like this. I mean, that's the law of the universe. It's kind of like, who said, you throw a ball in the air and it drops to the ground. It's like the law of gravity. This is the law of the stock market. The market does not go to the freaking moon and stay there. It comes back down again, right? If you believe that, and if you know that to be true, then you have to, or you should consider investing in some volatility. So the market goes down, volatility goes up. So guess what? If this comes down more, I'm going to buy more shares. Okay. So follow me. At the same time, I sold these calls. Why? Because I want to take in income. I just want to take in money, right? So UVXY, I took in $32. What happens between now and Friday? Let's just use this as a refresher, then I'm going to cut the video short. Basically what happens between now and Friday is if UVXY is 1050 or higher, I'm going to sell my 1,000 shares at 1050. So what does that mean? That's pretty cool, because I bought it at 9.455. So I made approximately $1 per share times 1,000 shares. I made $1,000 on the capital appreciation. I also get to keep the income. So remember, one of the best things when you sell stock options is that you keep the income no matter what happens. It doesn't matter if it goes up or down or stays sideways. Once you sell an option, you keep that income. So remember that. I'm going to say that once more. Once you sell an option, you keep that income, right? So I got paid $320. Now, if UVXY is not 1050 or higher between now and Friday, what am I going to do on Monday? I'm going to sell 10 more contracts. It's all good. What happens if it goes down significantly? I'm going to buy more shares and average out my costs. Then I'm going to sell more contracts. So what I'm doing is I'm setting up a strategy in which I get paid money, ongoing income, and it doesn't matter if it goes up or down. That is the beauty about options. If you're not trading stock options, you are doing yourself a disservice. So trade stock options, look at UVXY. As always, this is for education, right? So don't take my word for it and go buy some stuff and lose some money and go to the SEC and say, hey, Michelle, I listened to Michelle, blah, blah, blah. So you can lose money, right? That's full disclosure. You could lose money in the stock market, right? So there's no guarantee. Past performance does not predict future performance, all that blah, blah, blahness. So keep that in mind. I share all of my trades. So all these trades, see all these positions that I'm in, all these trades that I do, I share all of those with the group that I have. So if you're interested in becoming part of our trading group, what we do is we have a weekly Zoom call where I screen share. We go through questions. We have a private WhatsApp group. It's very, very active. We share like different ideas, that kind of thing. I'm on the Zoom call. So I've been trading. I started trading in 1997, commodity stocks and options. I was trading professionally from 2007 onward. I have a lot of experience. Options is my thing, right? So I'm on those live Zoom calls. I'm in the WhatsApp group. And then I also send out my trades as they happen live. So every time a trade kicks off, you would get an email notification on what was bought or what was sold. Okay. And then also, recently, we started yesterday, integrated a live Zoom room. It's kind of cool. So 11 to 11:30 Pacific time, every single market day. I'm going to go through my trades. It's like a screen sharing, and you kind of see exactly what I'm doing. And I talk through all of it, and it's a good way to learn. How much does it cost? It's $100 a month. $100 a month, and I could teach you all these tools that you can use on an ongoing basis. Anyway, keep it in mind. This isn't about a commercial. This is about like showing you value, talking about volatility. I hope this helps. I hope everybody trades options, because if you're not, you're missing the boat. And if you trade stocks, man, if you trade stocks and you don't trade options, or if you have a 401k at your job and you don't trade stock options, you are definitely missing the boat. You are like cutting yourself short. So just put in a little bit of time, put in a little effort, learn how to do this. And once you have the knowledge, it's like driving a standard shift car. I know I've said this in other videos. Oh my gosh, when I learned how to drive a standard shift car when I was like, I think I was like 23, I was making what I thought was a lot of money at the time. And I wanted to buy a hot sports car. And I did. I bought like my first like amazing, I bought like a Mitsubishi 3000 GT. It was like this super fast car. And then I bought like a BMW Z3. That was kind of cool. Two-seater convertible. That was like a James Bond's car. Anyway, it was a long time ago. My point is, I didn't know how to drive standard shift, right? So when I started learning how to drive standard, I was like, oh my gosh, I have to use my left foot, I have to use my right foot, I have to use my arm. I had just started driving not long before that. But guess what? Once it clicks, oh my gosh, I could jump in a car and drive stick today. So once it clicks, it clicks. So you put in a little bit of effort at the beginning. Once it clicks, you have that power for the rest of your life, people. So this is amazing, amazing, amazing. Be able to create yourself ongoing, consistent income forever. Anyway, I hope this helps. Hit me up if you have some questions. Please subscribe to my channel. I want to grow this channel. I want other people, I want to share all this information with other people that aren't doing this. There's a lot of shadiness, there's a lot of crookedness going on in the stock market, and you need to arm yourself with proper tools, proper resources, proper knowledge in order to, have the best opportunity to be successful moving forward. So give yourself that gift. Hope this helps, and cheers, and happy trading. Happy Tuesday. Bye.